today our exclusive conversation with the world's most successful hedge fund manager. At the close of last year, Pershing Square Capital up 40% as compared to the S&P 500's 14% gain. So far this year, most managers have been hurt by volatility, Bill Ackman included. The fund was down 9% as the S&P 500 fell 6%. Bill Ackman cited China as one of the reasons why. I asked him if he's changing any of his investments based on China's slowdown.
I think China has some real issues. I think they're trying to maintain an overly strong currency while their economy is not doing nearly as well, and that makes it very difficult for them to use the kind of tools we use to recover. And China's at risk of going through its own version. I don't know if it's 2008, but it could have a fairly big recession, and without monetary policy tools, you could have a Japan-like lost decade. So I think they're under a fair amount of pressure. I think this recent small devaluation could be the beginning of a larger one. I think they could solve a lot of their problems by letting their currency depreciate. And I think ultimately that's where they're going to end up.
How much do you let the markets and what we've seen as extreme volatility affect the way you make decisions?
It has almost no impact unless something we own or something we want to buy becomes interesting because the price moved up and down. I mean, I think there's a huge amount of capital that's relatively short term. Obviously you talk about high frequency trading, but even just, general trading oriented capital, people trying to make money every day, every week, every month. And that kind of trend following money can cause fairly dramatic moves in markets in short periods of time.
Speaking of China, Mondelez does have some exposure selling snacks. The idea is selling snacks to a growing middle class, and you are an investor in Mondelez.
Sure.
So does that make you rethink that position?
Not at all. China is going to be a very long-term growth market for Mondelez. It's not a place where it's not a particularly meaningful component of revenues today. It is one of the faster growing markets in things like chewing gum and ultimately chocolate and some of these sort of treats that middle-class people like. I think the Chinese economy, in order to long-term be successful, will need to develop more consumption. This is sort of a luxury, small-ticket consumption. It's the kind of thing I think would do very well in China over the long term, not particularly affected by any of the things that are happening now. Actually, interestingly, we were looking at recently Mondelez's sort of portfolio of currency exposures, and in the last month or so, we actually things have improved for them because of exposure to the euro, exposure to the British pound, for example, and relatively smaller exposures in Asia.
Well, when you speak about currency, I read actually yesterday, Monday, China, the FX reserves were down something like $96 billion.
Sure.
Do you ever think China only has 2 years before it runs out of money and this could be the next subprime?
I don't know about next subprime. Look, I'll start with saying that Chinese people are extremely bright, incredibly motivated, really remarkably entrepreneurial. I would be a very long-term bull on China. I do think they've made some mistakes in the short term in the way they in some ways managed upward the stock market, almost promoting speculation, margin lending, and then attempting to manage an imploding bubble. I think that's not been a great, doesn't build a lot of confidence for an investor to find out that the stocks they own they can't sell, and prosecuting short sellers, things like that do not inspire a lot of confidence. But long term, I'm bullish on China.
The second quarter numbers were tough for you, as they were for numerous hedge fund managers, and you did cite China as part of that reason. But you're saying long term, you're a bull, you're not concerned, you're not changing anything based off that.
No, we did not do anything. We didn't sell Howard Hughes because of the stock market.
You're not going quarter to quarter, which brings us back to the original point.
We own great companies. We focus on what's going on the underlying businesses. And the businesses we own, I would say, even in the month of August, became more valuable. These are companies that almost every day become more valuable. The Seaport, right? Big announcement today with Jean-Georges. This is really just the beginning of what's going to become, one of the most important assets of the company. That asset is more valuable today than it was yesterday. The stock market could assign a higher or lower value to Howard Hughes in the short term. And generally, that's an opportunity. The company had an opportunity to buy back about 10% of the company from its shareholders when the stock was 72 a couple of years ago. That was a good purchase. So the short term, the stock market gives you opportunities to buy back more of your company at an attractive price. Canadian Pacific has a very active stock buyback program. That stock's gone from a high of 240 to something in the high 180s, 190s. The company's been pretty active in buying out the partners who are more skeptical. And so I think what's nice about a public company is there'll be brief moments of people losing confidence, or maybe not so much in the business, but just selling because of fear. Those, for businesses who long-term retire their shares, that's a good thing. The business will become more valuable over time.
So in that way, it provides opportunity for you, and even long-term opportunity. Maybe the market is undervaluing an asset, and that provides you with an entry point.
Sure.
With Howard Hughes and this long-term activism, there are other activists who are looking at retail properties. And I'm thinking of Darden, which has gotten a lot of attention, spinning some into a REIT. I know you pressured McDonald's 2005, ended up dropping it. How do you see Starboard, for example, with Darden? Do you think that they're doing a good job? What do you see when you survey the landscape?
I don't know the Darden story that well, but I will say, just going back to McDonald's, what we pushed McDonald's to do was to sell their stores to the franchisees and become a pure real estate, what we called a brand royalty company. So McDonald's would simply own the brand and the real estate and rent those stores and collect a royalty from the franchisees. McDonald's took a couple of steps in that direction, and our goals were not purely financial, they were operational. Franchisees are much better operators of stores because you own 5 stores and you live in the community and it's your whole net worth. You work very differently in those stores than perhaps someone spending 6 months from the McDonald parent company hoping to get to corporate after a stint in the stores. What's interesting is that Burger King, which was acquired by 3G, adopted our plan for McDonald's very explicitly. In fact, they called me when they bought the business and they said, "Look, Bill, we're going to take your McDonald's plan, but we're really going to implement it." And they've done a remarkable job turning around Burger King, which was really years and years and years of negative same-store sales. Now they're leading. I think with respect to Darden, the true test of a shareholder activist is not presenting an idea and convincing a company. It's ultimately, and I have a lot of respect for someone stepping in, buying a stake, becoming chairman of the board, and I wish them a lot of luck with the company. But it seems like, I'm not, it's kind of small for us, so I haven't focused on it closely, but focusing on, how hot the breadsticks are when they're brought to the table or whatever their various initiatives are. It sounds like they're digging into the nitty-gritty of the company. Speaking
of nitty-gritty, where do you stand on minimum wage? There have been numerous cities who have raised it. Obviously, there's been a populist outcry.
Sure. Look, for number one, I'm all in favor of people who are earning middle-class or minimum wage type wages making more money. I'm a bit wary about making large changes in minimum wage in terms of impact on employment. I think many of the typical minimum wage job, the Burger King job, someone, 17 years old, 18, going to Burger King, those are entry-level jobs, but you can make $90,000, $100,000, $110,000 being a manager of a Burger King store, and the way you get there is by starting out at the bottom and making your way up. I think, increase minimum wages by 50%. It does encourage companies to start. It becomes economical to spend money on automation and other things. So I'm very much in favor of people earning minimum wages making more. It's hard to make a living it's very difficult to live on a minimum wage. But if it's a point of entry and you work hard and you can go to become assistant store manager and store manager, it's an entry point into the marketplace, and so it's a complicated question. I don't know the precise answer.
Well, especially in certain urban centers, it makes more sense than in others. You mentioned high frequency trading. We spoke with Mark Cuban, who was very vocal actually, and said this is causing a lot of volatility. It's actually causing it. It's not just exacerbating it. What is your position on that?
I think it's too hard to know. I asked Brad Katsuyama at. He knows.
Okay.
Volatility is the friend of the long-term investor and potentially the friend of a good short-term trader, but I don't know that many good short-term traders.
Find out why Bill Ackman does not invest in most tech companies and why he is making a big bet on a famous part of New York.